Welcome, everyone. I'm pleased to have you with us again. I am joined today by Robert Eaton, who is a principal and consulting actuary at Milliman. He's also an SOA board member and a new ACTEX author. So welcome, Robert.
Bill, thanks so much. I'm very glad to be here talking with you.
Today's topic is the actuarial career. And Robert's going to go into kind of typical projects and jobs and just help educate our listeners on some of the opportunities within the actuarial profession. So with that, Robert, I'll let you kind of take it from there. Let's talk about some of the different jobs and project work that actuarial science major could look forward to.
Sure, Bill. There's a number of different things I would consider fairly typical of work that's done by actuaries sort of at the beginning of their career. For starters, I think it's really important to know that you'll probably be working with a lot of data. That data may come in databases and, it may reside on the cloud. It may come through Excel files. And, what we learn to use as actuaries is use that data to make our estimates, for the use of, our customers, our shareholders, and our policyholders. So, the way that takes shape is usually through something like developing premium rates or pricing of new products, or possibly evaluating whether or not a certain assumption is valid or not, or creating new assumptions. So, we know that there's a lot of work with data. This is why the term data scientist is kind of emerging. There is a new form of data scientists. Actuaries are very much of the same ilk, I find. So actuaries will use that data and blend it into models in order to kind of make our predictions. So we talked about pricing. Another thing we do is project kind of future cash flows for what's called reserving or valuation, and that's where actuaries go through the exercise of calculating the liabilities that the company should hold on their balance sheet in order to satisfy their future obligations. So those are two of the very traditional roles that actuaries do, and what you'll be doing probably in your first years, in the actuarial career.
Yeah, and both are critically important to the profitability of the insurance company and its ability to pay out to policyholders. So it's really central. The actuarial profession is central to what insurance company does. Thank you. In those jobs, what are some interesting projects that you feel you'd like to highlight about the profession, whether it be more on the pricing side or on the reserve valuation side?
So reserves are often set as a starting point by regulation. Regulation sort of determines how reserves are set. I know this might not on the surface sound interesting, but for those of us who really enjoy problem solving and kind of understanding new complex tasks, some of the new principles-based reserving, for instance, that life insurers do, it's really engaging to go through the exercise of determining the sort of stochastic reserves and all of the different ways to kind of calculate your liabilities for a variety of really complex problems. So I would say, or complex products. So those reserves themselves kind of, they can constitute pretty interesting projects, especially as you're updating kind of old models to new models. But if that's still too dry for you, for instance, we are using really cool predictive models, Bill. Now these are models, gradient boosted machines, or generalized linear models to make estimates in new ways about future events. We use those models sometimes for clustering to determine which kind of sets of our features in our data are similar to others, or in other ways, we kind of train predictive models to make new estimates about specific events. Whether that be ER visits, whether that be long-term care incidences and home health, and assisted living or nursing home setting. There's all sorts of uses for these kind of models, and I expect someone entering the profession today to get in on that right away.
Yeah, it's a very dynamic profession. Like, it is constantly changing. The technology is changing. the regulations are changing, the modeling software is getting more sophisticated, AI, all of these things. So there's a lot of trends. InsurTech, that's kind of a big buzzword right now, and it's off and running. Why don't you talk a little bit about what it is and the types of roles that actuaries are playing in InsurTech?
Sure, sure. I think kind of philosophically, InsurTech is just the application of new technologies into insurance, and we see new technologies sort of being injected into the entire value chain of insurance. So insurance, in its essence, is a promise between a company and a policyholder to provide some benefit, and when some future contingent event happens, and there are that policy has to first be sold and marketed to a customer. An application has to be given and filled out, and the claim premiums processed over the lifetime of the policy, claims eventually processed, and finally maybe the contract is terminated. And even throughout that life cycle, there's many different changes that may happen. And I see InsurTech companies really placing themselves into every single point along that chain, Bill. So I would say first, maybe 10 years ago, if you asked me where the new technology is coming in insurance, I would have said kind of back office. I would have said something like, well, we're actually moving our actuarial valuation projections to the cloud. It doesn't sound sexy or novel these days, but in fact, that was a revolution. That somebody who was a valuation actuary that spent a week and a half at a major company running these models in tandem with other professionals in their organization now could send that off to a cloud server and 1,000 nodes and get their results quickly. That allows the actuary to do more actual kind of thinking on their own about the results and pivoting and making adjustments as necessary. It frees us up to do other more interesting work. Today, I think we're kind of moving more to the front office. InsurTech, I went to InsurTech Connect. It's a massive conference out in Las Vegas, and the companies there are now starting to be more customer focused and customer facing, meaning these companies want to be the platform on which the policy is administered. There's a lot of direct to consumer products that you'll probably see if you say the word life insurance enough while some of your social media apps are up. Suddenly you're going to start getting ads for many of these companies that are selling these products directly to you through accelerated underwriting, et cetera. So there's a variety of ways that InsurTech companies have kind of come in to hit the value chain of insurance. The one that's kind of closest to me, Bill, is where InsurTech ideas are actually changing the way that the products look themselves. We see this really a lot in the supplemental benefits space. We see this a lot in the life insurance space, and we're even starting to see a little bit of it in the long-term care space. So very exciting times ahead.
Yeah, I agree. It is an exciting time, and there's also a lot of talk about AI, and it just seems to me to be a tool that actuaries can use to augment their skills even further and elevate the level of analysis. If you want to talk to that point, and then we'll probably wrap it up and for this particular video.
Yeah, I think so, Bill. Actuaries have always sort of in ridden the wave of technology. If you went back to the 1970s to an actuary there and you said, I know that you're working on this pricing with this manual spreadsheet, literally a big sheet with columns and rows, or you're feeding Fortran punch cards into the machine. If you went back to that actuary and said, I have a computer software model for you, and you click on F5 and insert a new couple of assumptions, and suddenly your pricing is updated. What do you think you're going to do with all of your free time? The actuary would be, oh, I wouldn't even have a job, I'm sure the actuary might say, right? It's if you can do that, then what is the actuary there for? But we actuaries have kind of risen to the occasion and found a way to, first, maximize the value of that technology. As it's come along, first through spreadsheets and through databases and programming and really using big data machine learning now and AI are sort of the latest manifestation of that. They're actually drawing more keen insights into the data that we have as actuaries, and even some of the data that we don't collect, some of the data we get from other sources. I think the story is going to continue, where we're going to learn from those insights. We're going to use them to improve our own businesses, to improve our products, and to improve the lives of our policyholders, and also hopefully the interests of our shareholders, which are not just company shareholders, Bill, but regulators, and especially kind of like the citizenry, right? People who rely on our financial products for their own risk mitigation and financial stability. So I do think we're going to continue to sit atop these waves and to surf for quite a while longer, to use these insights to help our businesses more.
Yeah, I think that's just super exciting, and I feel like if students had any concern, prior to watching this video, that really directly addresses it, and I completely agree. And all the reading that I've done on it supports that as well. And obviously, there's a lot of people writing and studying it, so it's the profession has a very bright future for sure. Well, we're going to end this video. Robert's going to join us for another video on data science and actuarial science, and we'll get to that next. But so thank you for joining us. I hope you enjoyed this YouTube video. And again, thank you. We really appreciate it. Robert Eaton from Milliman.
Thanks, Bill. Really appreciate it.